The views and opinions expressed on the following program are not necessarily those of the staff and management of Salem Media of Hawaii.
Welcome to Generations Radio, where the focus is on our seniors and their families. We are here each Saturday afternoon from 5 until 6 p.m., bringing you resourceful information with our radio team of professionals in the field of aging. Stay with us for the next 1 hour as we explore different ways to make life more exciting and meaningful for our extraordinary seniors. Right here on AM 690 The Answer. And now, here is our host and the publisher of Generations Magazine, Percy Ihara.
And welcome back to Generations Radio. I am Percy Ihara here every Saturday and Sunday afternoon. And so, as you guys know, you can go to generations808.com to our website and also to our YouTube channel and just type in Generations Magazine. Make sure you follow us, though, so you get an update whenever a new program is put up on YouTube channel. And don't forget to go to our Facebook page and like us as well, so you can follow us. We have a young lady that's doing our social media, Mapuana, who does post 4 times a week now for us. And we give updates from the different stories in the magazine. And she puts out what's the new topic of the week on our Generations Radio. So thank you to Mapuana there. Anyway, you know, in the magazine, we always talk about trying to be proactive. And so we give you a lot of resources in the magazine. And one of the major ones, because of my background in the reverse mortgage business, is really financial planning. So one of our partners in the magazine is Ed and Travis Motosue from Financial Benefits Incorporated. So welcome to the show, Ed and Travis. Okay, now you can talk now, guys. I know Travis is a shy one, right? So anyway, Ed, welcome to the show. And give us your background, since a lot of people, you know, you're kind of the face, but I know you were trying to get Travis to be out there more, right?
Yeah, you know, a lot of people want to talk to a young boy instead of an old man.
Oh, come on. You're not old. You're not old. But you're very good at talking. I got to admit that. You know, must have been the years at Sears, I think you worked at.
Sears. I worked at Sears for 35 years.
I know. I mean, I love that store. I love what you guys did over there. Mm-hmm. All the salesperson were, my uncle, my brother-in-law's uncle worked there for probably just as long as you. He worked in the refrigerator appliance area downstairs. But great place. So, and then Travis, I know you're not shy, but you really are a good talker. You're a good speaker. Just you don't like to do that, do you?
Oh no, I can speak. It's just that I'd rather not speak, but I can speak.
I know you can, but you're the smart one. I know, Ed. You're the social one, but I know who's got the brains over here. I mean, he's an Iolani boy, right? So it must be pretty smart. Anyway, so when did you guys start your business, by the way?
We started our business back in 2010, 7 years ago. Financial Benefits Insurance. Back then, we started with just 4 agents. Then we went up to 8, then 12. Now we have 46 agents. Currently.
46 agents, and so I mean that's a big company. And you're still at the same location down by off of Piquoy?
Still located, yeah, by the Hawaii National Bank building.
Off of
Piquoy, right by Ala Moana.
That's a good location.
Yes.
And it must be pretty reasonable rent, because if you're downtown, forget it. The parking lot, but you have free parking, right?
Yes, free parking. So a lot of times we needed a place that's, that's central, located by the bus routes, and accessible to everyone. All our clients can be able to.
So, I work with a lot of financial advisors and companies in my reverse mortgage business, because we do definitely try to help each other plan out people's lives. But what kind of products do you guys specialize in?
We specialize in all the senior products. Basically, we specialize in the Medicare Advantage plans, Medicare supplemental plans. We also do a lot of the long-term care plans, living benefits, and retirement planning.
And when you say Medicare, you mentioned 2 different kind of Medicare plans. Mm-hmm. So for a lot of our listeners here, because what I've gathered over the years, a lot of the listeners are baby boomers, and they're getting into that Medicare age. I think it was 1969 1969 just turned 65, I believe. Is that right? I believe that's about right, because I know one of my friends does workshops for them. So Medicare Advantage, what's the difference between that and a basic plan? Is that the all-inclusive plan, the Advantage plans?
Well, you have Medicare Advantage plans that's provided by private insurance companies. Covers all the benefits of original Medicare and more.
Okay. The only reason why I keep on asking that question because as many shows we've done on Medicare, I still can't remember all the little idiosyncrasies about that. Because I'll tell you, when I golf with my friends, they're all over 65, by the way, but they're in good shape. They always have questions about that, and it's amazing how many people don't know.
Yes.
Isn't it?
Most people don't know anything about Medicare until they hit 65.
Right.
And they don't know anything about Social Security.
Well, Social Security is being a big topic and is being talking about now, but I think Medicare is worse because I think, 40 companies in Hawaii or 40 different plans in the state of Hawaii approved?
We had the last count was 16.
16. Oh, it's
Yes.
gone down then.
Yes.
Yeah. So at the beginning, there was around 40 different companies in the
Right.
beginning.
Right.
So I started this business back in 2005, and during that time, there's around 40 plus companies
Okay.
coming into Hawaii with all their plans, all their drug plans, Medicare Advantage plans, and things like that. As mentioned, slowly the competition slowly gets weaned off, and now there's around 16 different plans.
And you know what's amazing? A lot of people don't know that the supplemental plan covers the other 20%. Is that correct?
Well, supplemental plans are basically plans that have original Medicare Part A and Part B, and then they get a supplemental plan, and that normally covers part of that 20%.
Well, part of it, not
Yes,
all
well,
of it.
there's all different types of plan, from Plan A to N, and so it covers in various degrees of that 20%.
I'm sorry, you said A to N?
A to N.
Correct.
Yes.
I thought it was A. Okay, A is a basic?
No, this is totally different when we talk about supplemental plans.
Oh.
Okay, we have
you
supplemental plan A, supplemental plan B, K, the G's, the new one, N.
What's the G? What's the new one?
Well, the new one that's going to be coming in fact, it started this month, is basically complete coverage with the exception of the $183 deductible for Part B.
And Part B is the
Medical, medical
the
preventive
visits?
care, office visits.
Okay. And so I didn't even know this until about a year ago that Medicare doesn't cover vision and dental. Is that correct?
Yes.
And so what?
Well, they say that they cover dental, okay?
But just
the
cleaning, probably.
dental, most people know dental as teeth. Theirs one is not teeth. Theirs is basically jaw.
What are you
So if you
doing
get into a
with
car
jaw?
accident, you
What?
break your jaw, they're going to fix your jaw, but not your teeth. So for all
What?
intent and purposes, it doesn't cover dental,
So
as the way Medicare covers it.
So if you have a supplemental plan, does it cover dental?
No.
So, so who covers dental then? Doesn't somebody cover dental in the Medicare plans?
Well, certain plans they might cover cleanings or preventive, but it's not really dental.
Yeah, it's
So-
not under original Medicare.
Yes.
Medicare
Okay.
Advantage plans have some kind of riders, different things that can cover those kinds of stuff.
Okay, so some of the Advantage plans can cover dental.
Correct.
Because I've had people that got the reverse mortgage because they wanted to fix their teeth, they wanted to get new teeth, or they want to get, what do you call those things? I call them the curtains. What do you call those things?
Dentures or implants?
The Invisalign.
Veneers.
The veneers. So dental, no insurance plan covers that?
None of the Medicare plans cover that. But actually, there's a Medicare Advantage plan if you have special needs. So if you have Medicare and Medicaid, there's a dental plan Medicare Advantage plan that could cover dental.
Really?
Yes.
Or is
It
that
covers
what they call the dual
dentures.
eligibles?
Correct. Dual eligibles, Medicare and
okay.
Medicaid eligible.
So a lot of our listeners have parents that are still alive. And that's why they listen to the show, looking for resources.
Mm-hmm.
So can you explain really well, you probably can't do it really quickly, but you see that commercial a lot. Oh, if you're on Medicare and if you're on Medicaid, you might be able to get this one plan.
Mm-hmm.
What exactly is that?
Well, that's basically
The dual eligible, they call it.
special needs plans. Okay, and these plans are basically for those with limited income, Medicare, Medicaid, and so some plans have benefits in which they cover dental, okay, up to certain dollar amounts.
Yeah.
When you say special needs, when somebody qualifies for Medicaid, a lot of times because of income assets, right?
Mm-hmm.
But they're not really special needs, though. Are they?
Well, when you're talking about special needs, we're talking about special needs Medicaid, so it's limited income.
Right, limited income and assets. There's a lot of them
Yeah.
out there. I think the new statistic I saw was 60% of people are on Social Security only, and that's only over $1,000 a month. Can you imagine that 60% of our senior population is on that? Oh, that's it. It's hard to believe, but it's very, very true. I mean, I'm seeing it myself as clients call me up, but it's just important that people start planning. So, okay. Long-term care, I know that's a big, big topic today. If you saw the advertiser recently, they had a statistic about all the caregivers or the cost of care. And it still it surprises me to this day how people don't realize how expensive it is. It's expensive.
It's very expensive, and that's one of the hot topics, especially for retirement planning. Because normally for retirement planning, people are just basically taking a look at the three legs: Social Security. They look at stocks, mutual funds, bonds, and then the other one would be 401k or IRAs.
Right.
Okay, and they don't even think about long-term care.
And people don't even think they're going to die, first of all. You know, they think I'm going to live forever. I say, well, that's a good thought, but it's probably not going to happen. We're all going to die at some point in our lives, but it's important when I tell people, I say, open your left hand, open your right hand. Left hand's where you are today, right hand's where you're going to die. When you're going to die, you got to worry about everything in between, right?
That's
and
right.
it's really important. So when it comes to long-term care, but don't you get a lot of people that tell you, you know, Ed and Travis, it's just too expensive. I can't afford that. What do you tell them?
Well, for long-term care, it takes planning. If you don't planning, basically you're going to come up with only two alternatives:
And that
Medicaid,
Okay.
and then if you own a home, reverse mortgage.
Well, I can sell the house.
Or they can sell a house, but if they sell a house, where are they going to live?
They're going to move in with your son, Travis, here. We see it all the time. In fact, you know, I got in the reverse mortgage business almost 15 years ago. And when I first started, people, what? You're doing a reverse mortgage? That's not good. I said, no, I did my research. There's a lot of people are going to need it, and home equity is very important to people. But you know what? About a year and a half after I was getting kind of frustrated about first year. About a year and a half, and I can remember, I think it's April 6th, 2004. I do a lot of research in my business, and so I ran across a press release from the National Council on Aging, and I have that on my laptop. I always keep it, and I show people that's what turned my career around. And basically, the National Council on Aging said they did a study about the reverse mortgage, and he found it's a really good way to pay for long-term care. It was a simple one-sheet paper, letter size press release, and I sent it out to everybody I knew in our industry, and man, the calls started coming, and it hasn't stopped. And I've been telling this for years. I think I mentioned before on the radio show that, you know, caregiving is going to be the biggest social and financial problem we're gonna face in funding long-term care. But you must see that a lot too, don't you?
Mm-hmm. Yes, and I remember when I first met you, I said, "Percy, you're a nice guy, but I don't believe in a reverse mortgage." Remember?
Yeah.
And he said, "Hey, let's take a time.
You and 1,000 other planners. Like I was at an insurance conference 2 weeks ago, and you know they were coming walking. I had an exhibit table here up at the Holly Car, and you know about 80 agents there walking around, looking at all the tables, and they all look at mine, turn away, look at my table, turn away, look at me, turn away. He goes, "Hey, come here. I want to talk about a reverse mortgage." "Oh no, we can't talk about that. That's not good." You know, it's like no. In fact, if I want my own house, that's going to go to my kids, and I told them it's going to stay in the family. I said, well, if you have more than one kid, it might be kind of hard. But, you know, it's just people just don't understand. And I use the word ignorance. They just don't understand. And I get it. That's fine. But in your business, you know, you're there. I don't sell insurance. You know, I don't. So, and reverse mortgage is just an option, one of the options. But I'm a big believer in long-term care insurance. Every client I talk to, we talked about how do you take care of yourself when you can't take it. When you can't take care of yourself, who's going to take care of you? You know? And so, but how do you broach that question? How do you start that conversation?
Well, because long-term care insurance really changed, okay? Because the traditional long-term care basically was a use it or lose it proposition.
Right.
Okay. And people didn't want to waste money.
Yeah.
Okay? And because they didn't think long-term care insurance should be like car insurance or homeowners insurance.
Right.
You know, They wanted not to waste their monies, and so right now you have long-term care insurance tied in with life insurance,
right.
and they have long-term care riders.
I've got that.
Okay, so in case you don't use it, it goes to your children, goes to the heirs.
Right. But on the life insurance, you have to get the rider though, right?
Some of them you have built-in riders.
Right.
Okay.
But let's say they have a life insurance now and they want to get that rider. Could they get that?
No.
No.
No,
You can always try to 1035 exchange it and look into another plan policy if you wanted to as well.
A 1035 exchange of a life insurance policy?
Yes, on the cash values.
Cash values.
Oh, the cash value
you can-
only.
If it does have cash values, yes. You can always
Oh,
look
I
into
see.
that, transfer it over, and maybe reapply into one that possible. Because just like how life insurance, just like how cell phones have changed, yeah? So now before it used to be the big brick cell phones. Now you have the flipped cell phones. Now
Were you
now
old
it has
enough
the
to know that
smartphones.
brick?
Oh, yes, of course. My
Really?
grandpa was a taxi driver, and he was the very first one to have a cell phone. It was the big bricks.
Oh my goodness, I think it was. I got in mortgage business 1988. I think it was 1990. I think maybe 89. They started selling the bricks. In fact, Honglu Cellular was a company my friend actually sold for them, and I saw it. I think, wow, what the greatest invention, a cell phone. And then they had the little thing for carry a car phone. That's pretty cool. You have a car on your phone. My God, look at today. Everybody's on that.
Yeah.
You know, I've even got a little wireless thing for my phone here.
That's right. And your phone is not used for calling, basically. You use it for every other thing.
Oh my goodness, yeah, it's so funny. I mean, but I try to wean myself off because it's just because I have my emails on here and my date books. I don't carry a pen anymore. You know, it's so funny. We had lunch today, and with three ladies you probably know, and we're all searching. He goes, oh, was some kind of a fundraiser coming up, and they want to write it down, but nobody had a pen. Nobody had a pen. It's so funny. We had to go ask the waitress for a pen. But so long-term care, when you say it's changed, I mean that's the new hybrid plan. Is that what you're talking
We'll call
about?
it hybrid plans, but you know what? Basically, long-term care, okay, or life insurance has changed because it's not really death benefit anymore.
What do you mean by
Okay?
that?
You're not gonna use all. It's not gonna use it for your heirs. You can use it when you're still alive now. That's what we call living benefits.
Oh, I see.
So if anything happens, you have chronic illness, critical illness, you can pull that money out and use it while you're still
Percentage
alive.
of that, right?
Yeah.
And but does it cost more? It must cost more then, right?
Well, it costs a little bit more. But when you take a look at it, yeah, it's best to pay a little now than pay a large percentage later on.
That's
Big
what I
dollar
try to
amount.
tell people. They can't afford it. So, well, can you afford to pay cash? Because you rather pay 10, 20 cents on a dollar versus a dollar. I mean, to me, it doesn't make any sense. But then again, you know, a lot of plans I work with, about only 50% qualify because of the health issues, right?
Yes, you have to be insurable.
But I'll tell you this. I've been trying to take my parents to buy long-term care insurance, and they bought it about, I think it was about 10 years ago they bought it. And my mom was 76 and my dad was 76 and 78. And he got it. I wasn't as knowledgeable back then as I am today, but he had a quintuplet bypass. My mother had breast cancer, and they both got long-term care insurance. So I said, you had a quintuplet bypass. How did you qualify? He qualified.
Mm-hmm.
And he goes, you know why? I said, no, tell me. He goes, because next time I have a heart problem, I'm going to die. They'll never have pay out long-term care insurance for him. I said, wow, that makes a lot of sense. It does. And he turns 89 next month. And I'm sorry, he turns 89 in 5 days.
Mm.
And he's been living with his quintuplet bypass for 15 years, maybe longer than that. Mm-hmm. It's amazing. But so we have that plan ready to go. You know, I have another relative. They actually went on claim for skilled nursing, and it's saving them. I'm telling you. I mean, it runs anywhere from what 9 to 12,000 for skilled care, and the memory units today are at about 11, 12,000. So people just don't realize that, do they?
Yeah, they don't, and therefore when we're talking to families, we're talking to the children. It's best easier for the children to spend $200, $300 each now than pay $8,000, $10,000, $12,000 a month later on.
Well, I have several clients paying a premium for their parents.
Yeah,
Because I tell them, you know, you want to do it or you want to pay somebody to do it. Well, I want to pay somebody to do it. Well, then you better pay your parents' long-term care insurance premium then. You want to pay $200 a month, $400 a month, or $4,000 a month. So that's how we approach it. But it's just so important. But, the two biggest companies are no longer selling long-term care insurance, right? John Hancock and Genworth. So what are the
Well, you have other companies, okay, because those are the traditional long-term care companies, okay, and it was so new that they couldn't estimate the cost, the increase in cost, and they underestimated.
Well, nobody thought the average age is going to be 80. I think in Hawaii is 78, and I think
78, 81.
Yeah. I mean, whoever thought that 10, 15, 20 years ago, right? I mean, nobody. When I got in this business, 14, 15 years ago, life expectancy was like 72. Alzheimer's, once you got it, was about 5 to 6, 7 years. Now it's like almost 10 years life expectancy, and it's really important. When I got in business, long-term care, about 50-50 chance. Now it's almost 80%.
Yes.
And that's a national statistic. So when you add in our great weather, great food, less stress, I think it's more like 90%, if not more. But how do you handle that objection? How do you explain to them that it's something they need?
Well, it's really starts with planning. They got to get the insight. You got to take a look at the math. They got to take a look at the history, the increases, and one of the best things to do is just visit the homes and the retirement homes. Take a look and visit and take a look at all of these and then you could take a look at the dollar amounts.
Yeah, I mean, that's my plan. My plan is to eventually go into a facility because I don't like driving a whole lot, even though I have to drive. But it's not big. It's a big pet peeve of mine. My wife's a good cook, but you know what? I'd rather her not cook because when she doesn't cook, I don't have to wash dishes. Seriously, that's a deal. She cooks, I wash dishes, and it's a mess sometimes. But I don't want to do in the yard. I don't. In fact, we have a yard, but we never go in the yard. So why not? In fact, my yard man came today. Like you haven't been here in a month. It's a mess. But I don't want to do the yard. I just want to have a nice time, go visit friends, invite you over for dinner. I pay for you. We have good food. We have a glass of wine. But all the places now are so nice. They all have coffee bars now. Have you seen all those coffee bars? It's amazing. What is the average cost? Have you seen the average cost now?
It's average. I think will be about 10,000 now, and we're not talking about top of the line now. We're just talking about
that's average, right?
Yeah.
So if you're listening to the radio show, we're talking with Travis and Ed Motosue from Financial Benefits Insurance, and think about it yourself. So let's say it's 10,000. That's more like skilled care because retirement living places what 4,000 to 5,000 a month, right? That's with no care, right?
Yes.
So let's say it's 10,000 a month today, because I just did it. I did this calculator yesterday. What's the average cost will be 20 years from now? Have you thought about that?
Well, when they take a look at it, it will be about $170,000, $180,000 a year.
That's now or then?
Then we're talking about just down the road.
Yeah, and that's a lot of money. So what's the average stay in a facility?
Well, we say right now it's about 10,000.
But I mean, average stay, 3 years.
Okay. Normally it's about 3.5 years.
Yeah, I mean that's a big chunk of money. I mean, I've seen a lot of clients. I've dealt with a lot of trust companies where they're managing the client's money, and eventually call me because their client ran out of money. I said, well, who's managing the money? And they don't think about long-term care. A lot of times these older adults didn't think about long-term care. But I think everybody is talking about long-term care now, aren't they?
Yes, because the fear is running out of money, not having enough money.
That is the biggest topic.
That's right, because when you just take a look at it, a lot of people say, you know what, when I retire, I have enough money. But if you have $1 million making 7% interest a year, 30% tax bracket, how long do you think that $1 million is going to last?
People don't think about that.
Only 18 years. That's all. And $1 million is a lot of money now.
Oh, I know. Well, I mean, most people don't have pensions. See, if they had pension and Social Security, not so bad. Now, my dad was retired military, but he's been retired longer than he actually worked. Can you imagine that? I don't know about anybody listening today, but I don't think that's going to happen anymore.
That's right. When Social Security first came out, it was supposed to be 40% of your retirement income. Now, for some people, it's 100%.
60% is 100%.
That's right.
And that's something that, especially in Hawaii, the cost of living is so high, and it's not going to go down. And so people, if you're listening, please think about that. I mean, if your planner hasn't told you about long-term care insurance, get another planner. I hate to tell you that, guys, but you really got to. So I know you guys talk to, every planner should be talking to. If the planner just only stocks and bonds, great. Tell them, can you refer you somebody that understands long-term care insurance? Because I'll tell you, I've seen several clients run out of money, and they're millionaires, like you said, because they're paying dollar for dollar, or maybe they didn't qualify. But worst case scenario, just make sure your wife got it, right?
Yes.
Because who's pushing you in a wheelchair, guys? Your wife will be doing that.
That's right. See, I don't want to sound sexist, but generally,
No,
wives can take care of their husbands, but the husband cannot take care of their wives.
I mean, I've seen a few. It's hard,
Exception.
though. It's hard, And I think it's not sexist. It's a fact. Women will outlive their husband, men don't think about that. They don't think. They only think, okay, my wife take care of me. But then when you're gone, do you ever think who's going to take care of your wife? Oh, my kids. Well, I mean, gosh, I don't know if anybody's taking care of a parent. I have not. I'll be honest with you, but it's very difficult. I mean, I have neighbors taking care of their family members, and they're just dying. I mean, most caregivers, as you know, they after a while, a few years, I mean, statistically, their life expectancy goes down, their health goes down, they get more chronic diseases, and the key thing is that when they go down, if that spouse goes down, what happens now? What do they do? So it's really important that I think understanding the plans, right? But how are the premiums? Are the premiums still going up a little bit?
Yes, premiums go up, but when you take a look at it from the old, let's say, insurance, okay, right now it's a lot cheaper and you have better benefits.
Better benefits?
Yeah.
Than before?
Yes.
Well, I know in the old days you could only stay in a facility. Now you have an option, and now don't they have a cash benefit plan as well? Mm-hmm. They have an option for that.
Yeah, because most people, when you take a look at long-term care, they want to stay at home.
Oh, absolutely.
And they want family to take care of them.
Ooh,
somebody that they know.
I don't know about, they may think they want family, but man, does that family go, Dad? I don't think so. I mean, you hear stories about people taking care of their parents and have to bathe them and wash them. I'll be honest with you. I don't know about you, but I don't think I could do that.
Yeah. Well, look at Travis. Travis said, Dad, you're so hard to live with. You better get long-term care plan.
Well, I mean, live with is fine, but then you have to bathe them? Come on. I mean, that's really hard, but it is a big topic, and I think if you're listening out there, every week we talk about aging, but this show is so important that if your planner has your financial advisor, well, first of all, make sure you have a financial advisor, right?
Yes.
Because more and more people are saying, oh, he made me lose money, or he just wants to sell me a product, or he don't call me. Hey, find somebody else. Call Travis and Ed over at FBI, Financial Benefits and Insurance, and you're in the magazine, so thank you very much. I think we got to take a short break, and then we'll be right back. I want to talk, Ed and Travis, more about retirement planning, because that's really what a lot of people are not doing, and it's really important people do, because Social Security, I hate to tell you that, but most people, my friends, they live on Social Security only. So we'll be right back. We'll take a short break.
We will be right back with Percy Ihara from Generations Radio. If you have any questions or want to be part of our discussion, give us a call at 296-5467. That's 296-5467. This is Generations Radio on AM 690 The Answer.
Moon Physical Therapy is here to help you back to recovery. Moon Physical Therapy is located on Ward Avenue across from Sports Authority. Physician prescribed for motor vehicle accidents, workman's comp, or that body pain that comes from rushing to play without warming up. Also event cardiopulmonary rehabilitation with our one-on-one patient care. Moon's Aquatherapy heated endless pool allows for low-impact exercise with less pain on land. We will give you the right exercises to get you back to health. Ask your doctor to prescribe Moon Physical Therapy. Moon Physical Therapy. We achieve results.
Aloha, this is Martha Clopin.
And Al Harrington. Choosing the right Medicare plan not only saves you money, it also helps you avoid headaches and heartaches down the road.
We want to remind everyone
to listen to a Medicare Moment with Martha, Sundays from 9:30 a.m. to 10 a.m. as we help answer important questions on Medicare so you can stay healthy, wealthy, and wise all year long.
Call me at 543-2073, 543-2073.
Oahu's newest senior living community, Ilima at Lehano, is now open in the heart of Kapolei. Within this beautiful new community, offering independent living, assisted living, and memory care, you will experience a feeling of ohana that provides a sense of community and peace of mind for our kupuna. A range of spacious apartment styles are available, from large studios to spacious 1- and 2-bedroom plans, most with a large private lanai. Be one of the first to call Ilima your home. Visit ilimaAtLehano.com or call 674-8022.
Got Vegas on your mind? Get Vacations Hawaii on the line. Vacations Hawaii offers weekly 4- and 5-night Honolulu to Vegas packages, which include 3 meals daily from $6.99. Stay at Hawaii's favorite casinos: California, Fremont, Main Street Station, and Orleans Hotel. Vacations Hawaii will get you there in comfort on deluxe wide-body 767 planes with complimentary in-flight hot meal service. Vacations Hawaii's frequent flyer program gives you future travel discounts and credits. So if you're ready to win big, call Vacations Hawaii at 591-4777 or visit VoidVacationsHawaii.com.
Today, more than ever, we local people are living longer than any other state in the Union, with more seniors, baby boomers, and caregivers. Generations Radio promotes the importance to be proactive as we all age. The radio team will focus on issues facing our seniors and their families, finding resources to navigate healthy aging along with financial, legal, and caregiving information. So join Percy Ihara from 5 until 6 each Saturday, right here on AM 690 The Answer. Focusing on the issues facing our seniors and their families today. Here's our Generations Radio host, Percy Ihara.
And welcome back to Generations Radio. We're here every Saturday from 5 to 6, Sunday from 3 to 4 on AM 690 here. And if you're listen to our YouTube channel, just make sure you like our channel, follow us so you can get an update, an email whenever we have our show put up on our YouTube channel, and then when we put it on our Generations 808 channel. But anyway, we don't forget August 19th, Saturday, at the Alamon Hotel from 8:30 to 2:30. Be there early for seating and parking, because we're going to get over 1,500 people there. And one of our Generations partners will be a sponsor and actually presenting at our Aging in Place workshop. So we're here at Ed and Travis Motosue from Financial Benefits Insurance. So your talk is really going to be talking more about Medicare, or are you going to talk more about retirement planning?
No, that talk is going to be Medicare.
Yeah. Medicare. Oh, okay. So are you going to, because it's August, but you really can't sell Medicare. Well, you can sell Medicare all year long, but the new plans don't come out to October.
Actually, we can start talking about the new plans October the 1st.
Okay.
Okay, but we cannot enroll anybody until the 15th.
Right. Why is that, by the way?
That's set up by the federal government. So that's what we call AEP annual election period from October 15th to December 7th. Every year.
Yeah. Oh, so that's the only time you can sign up.
Basically, that's the annual election period. So that time people can change from one plan to another plan, stay with their plan. Okay, but they have all the options. So this is when the activity is the greatest.
Right. But all year long, people can sign up when they reach 65,
turn
right?
65, or if they're retiring from their job, or maybe they're moving. Maybe they're moving from one island to the next. They can also be able to switch plans during that time. So there's always exceptions. They're called special election periods.
I never thought about it, because it does make a difference what island they come from, right? Or where they're going to, right?
Yes. There are different plans on every island.
I didn't. Is it because of different services on every island?
Different counties. Every island has different doctors, networks of providers, and different things. So that's the reason why there's different.
I wonder how it's going to be on Maui, because they're taking over. Kaiser's taking over Maui Hospital.
Yes, Kaiser's taking over Maui.
And they're taking over Maui Hospital. And what was the other one they're taking over? I think Kula Hospital. Not Kula Hospital. Is that still open? They're taking over 2 hospitals over there, I think. But yeah, so that's really going to affect them when it comes to Medicare. won't it?
Yes.
Anyway, so this half of the hour, I wanted to talk more about retirement planning. And when it comes to retirement planning, when should we start planning? At 40, 50, 60, when we retire?
Actually, retirement planning starts at an early age. The earlier you start planning, the better off you are. Okay? I would say at least by 40 you should be taking a look at it.
If you can afford it, right? When you got kids in high school or going to college, how are they going to afford that?
Well, you have some people that work, and if their employer puts in like for 401k, they match 4%. You put in 4%.
You know how many companies don't have 401ks in here in Hawaii? What is it? Is it? I can't remember the statistic. Nice, I have it somewhere. Isn't like 80% or 90% of companies here small companies?
Yes.
And you know that of that figure, isn't 80% don't even offer 401ks?
They don't. They don't offer.
So what do people do?
They have to put money on the side.
So when you say aside, what do you mean by that? I mean, like stocks, bonds,
When you
savings?
take a look at it, either going to be stocks or bonds, okay? But, we're from insurance, so we say, hey, you know what? Put in insurance. Insurance has changed because we have insurance now. It's also tax-free income. So we have participating loans, so you can borrow monies.
I mean, like the cash value.
Yeah.
But most people, from what I've seen, is that most people only get term life.
Well,
when they're in their 40s.
If they're young, they have term insurance, okay, because they want to maximize their mileage, okay. But term insurance is really temporary. So if before in the 70s we had A.R. Williams, and we said, hey, you know what, get term, invest the difference. But a lot of people, they didn't invest the difference.
Yes.
Okay.
Yes.
So right now, if they get permanent insurance, you have whole life, you have universal life. Well, you have a lot of different options now.
Or even if you look at term insurance, is also if you get term insurance, it's affordable, but just make sure if you get a term insurance, make sure it's a term insurance that's convertible. So a convertible means they can convert into a permanent insurance later on.
Without underwriting.
Yes.
Without underwriting.
Oh, I didn't know you could do that.
Yes. So a lot of companies do have that.
Really?
As well. Yes.
Oh, I never even thought about that.
Yes.
I have a whole life, but the downside to whole life is what? You got to pay the premium for your whole life.
You got to pay. But
people don't realize that.
But that's guaranteed.
What do you mean? Not guaranteed if you don't pay the premium. If you can't
No, I know
it.
that, but you're going to get that amount at the end.
Yeah.
It's not a projection.
But, like I said, you got to pay that premium. That premium doesn't go down, right?
And it doesn't go up.
And with the low interest rate environment, a lot of people, I was telling my wife that last night, with the low interest environment in the last, 10, 15 years, it hasn't been good for the insurance companies, right? Mm-hmm. So some policies will lapse, won't they?
Yes. That's why insurance policies have to be reviewed.
Yeah, it's really important, guys. So
you say, well, you know what, you got to maybe increase your premium.
Yep. So if you're listening and you don't have a financial advisor but you have life insurance, you better go call your insurance agent up or go call up Financial Benefits Insurance because it's really important. A lot of people don't do that. I know that. Yes. Because when I see your clients, they go, "Oh, I have life insurance." I say, "Well, where is it?" They don't know where the policy is.
Not only that, they don't even know who the agent is.
No, the agent most of them died already. So it's funny as it is, yeah. That's why I always make sure that they find a new young one. So that's why, Travis, you gotta get out there, man. Your dad is in good shape, but he's not gonna be around forever, Like he maybe is still alive, but he's not gonna be able to talk like this now.
It's so funny when we're talking to clients, and I just say this, hey, you want to talk to the old man or the young boy. A lot of them say, "Oh, I want to talk to Travis because he's going to be around when I need him."
Oh, absolutely, and he's a smarter one anyway. But so for life insurance, though, I mean that's why I tell everybody. I mean, if you want to give your kids, if you think you're going to give this house to your kids, good luck. They're going to split it, or hopefully they don't have to go on Medicaid. But life insurance is the guarantee, right? I mean, whole life especially is guaranteed. But doesn't it cost more when they added that thing they called it the cash value? Doesn't that cost more, or the premiums more?
Well,
not all are cash value, right?
Yeah, all depends. All depends why they're buying life insurance. Okay.
Because Uncle said, better buy from me.
Yeah, but when you take a look at it, all the proceeds from life insurance is passed on tax free.
You mean the premium? I mean, when you die, it goes to your wife or your son or whatever.
Tax free.
Right. That's really
Big,
important.
big plus.
But so when you say tax free now, so when people do retirement planning, there's a Roth IRA.
Roth, you don't pay taxes. You pay it up front already. But for
Right.
your 401k, when you take that money out, you're paying taxes.
So all 401ks are taxable.
Yes.
So there's no 401k not taxable? Really?
Either you pay taxes now or you pay taxes later.
Oh. But so why did they create the Roth IRA where you pay?
You
so
pay
the
taxes.
Roth,
You pay taxes
Yeah.
now.
So how do they do that? They pay. How do they take it out the taxes now?
You pay taxes now because when you take a look at it, 10 years from now, you think tax rate is going to go up or they're going to go down. Most times it's going to go up, so you'd rather pay taxes.
Trump said it's going to go down. Didn't he say that? But you're right. So when you actually cash in the IRA, you're at a lower tax bracket. Is that the reason why?
Well, that's what the people think. Okay, but that's why you have Roth IRA. You're paying the taxes. You're paying it now, so when you get the money,
you can afford it.
It comes out no tax.
But a lot of people do that. Is that the same? A lot of people not doing
more
that?
people have 401ks than they do IRAs. With IRA, it's voluntary. You put it on. You have to put it on yourself. It's not automatic deduction.
Right, but a lot of people like myself didn't know you could lose money in a 401k. After 9/11, I lost a lot of money in a 401k.
Look at me. When I retired from Sears in 2006, okay, what happened in 2008?
Oh, the financial crisis.
Yeah, so I lost.
Yeah, a lot of people don't know that. I mean, I'm in the financial field. I didn't even know that. Like,
So
what's going on?
if the market goes down when you're still working, it's not as bad. But if you're retired and the market goes down, it's harder to recuperate.
Right. So Travis, when you do retirement planning, what's the average age you see? 50s, 40s, or because what I hear, a lot
Average
of
is around
60-years.
60s.
Yeah,
60s
isn't that true?
really in truth, yes. 60s and
Why
older.
is that though?
Well, because a lot of times you don't think about it until it's really happening to you. Yeah, you don't think you hear about all these stories, but if it doesn't directly affect you, a lot of times you're not really concerned about it until it's really coming. You're nearing the age of long-term care of needing long-term care, and that's when you're really looking into it now. Not way before. Yeah. So you don't see guys my age, 36, their 40s, looking into long-term care now. If anything, they're dealing with their own family, their children, and things like that.
Well,
nowadays.
I've known it since my 40s, but I decided, I'm 57 now, so we just got qualified. We're looking at choosing a long-term care insurance plan. But when we had our son, we got college funds set up and life insurance set up. But even college funds, people are not even planning for college, are they? Or do you see more of that today?
A lot of times you can do the college funding possibly from, sometimes they do it from their life insurance too. They just overfund the life insurance and then they borrow, when they need to go to college, they borrow from the life insurance policy to fund their college. That's what some people do instead of 529.
The 529?
Yeah.
Wasn't it be more costly doing it that way? Because you're taking out only cash value from a life insurance policy versus a true college fund.
Yes, but sometimes people say, what if they save all that money, but then what if their children doesn't even go to college?
Then what happens is taxable, right?
Yes.
But you better kick the guy in the kid in butt. You better go to college, unless you get a scholarship, But
you know what, Percy? College is not for everybody.
That's true. Oh no, trust me, I know.
College is to have fun, to socialize.
Ilani boy.
But I think in my age now, a lot of my classmates, like I think 5 of them graduated this year in high school, and now they're all going off to college. I was talking to my friend yesterday. Yeah, he's going to escort them, go take them up to Portland somewhere, and one of their friends going to Creighton, and in Pacific. I mean, they're all like $40,000-$50,000 a year. Mm-hmm. How do people afford that?
It's hard because if not, they got to take out loans.
So what they do is they take out loans on their house, and they refinance. So by the time they're really 65 to retire, they realize, oh, honey, our mortgage is $300,000 now. You can't retire that way. It's really hard. But So if I came to you, Travis, because you're a younger and smarter guy, I say, what's the best thing I should do for retirement planning? What would you recommend?
Well, you also gotta plan exactly what you're looking at doing. Yeah, so everyone is different. Yeah, in terms of what they wanted to do with in the future. There's many different plans you can look at. You gotta look at your health. Let's see.
Look at your health.
Well, when we take a look at it, we always take a look at what level you want to retire. Okay, and when I say your lifestyle, what you're going to be doing, when you take a look at it, one of the things that people always forget is that when you get older, you're going to the doctor more often, you're going to the hospital more often. So what is important? Health. Okay, I have a hard time. Okay, because I'm overweight. Okay, it's easy for me to take care of my dog, and my dog was 25 pounds overweight a year ago. Now he's lost that 25 pounds.
Your dog?
For me,
what kind of dog you got?
I got a Jindo, Korean dog, Korean Jindo.
How does a dog lose 25 pounds?
Because I can limit the amount of food I feed that
I
dog.
see. Oh, really?
I feed him half of what I used to before, morning and at night.
Really? I've never heard of a dog losing 5 pounds, let alone 25 pounds.
No, he's supposed to be 50 pounds.
Really?
And he was over 75 pounds.
Wow.
Okay, because we didn't walk him as much as we should, and maybe we fed him a little too much. So he didn't have physical exercise and was feeding him a little too much.
Mm-mm.
Okay, but for me to lose 25 pounds, it's hard.
Well, as you get older, it's always going to be harder anyway.
Mm-hmm. But when you take a look at it, we should be taking a look at our health. As we get older, it becomes more important.
Yeah. Okay, Travis, you better start limiting his plate lunches now, okay? But it's so true. That's why we have in the magazine, we have a personal trainer, we have 2 physical therapists, we have an acupuncturist now, and I'm very, very aware of that. And, last week's show we had Xanthocin, which is an anti-inflammatory, anti-aging drug, not drug, but supplement, dietary supplement. It's really important to stay healthy that way. But most people don't think like that. Yeah. So how do you get them off the rock? How do you get them to come to a workshop and start really thinking about this?
Something serious has to happen, and hopefully it doesn't have to be life-threatening. It's almost like my dad. He says, I'm in good health. But he takes about 12 different type of pills, but he thinks that he's okay.
No, that's 12 different pills. That's not good at all. Got to get him off all of them. But I really think, we've got to start thinking about that. But when it comes to, does it make a difference at what age, how do I decide with regard to a 401k or IRA? What is there an age bracket or a time of pre-retirement that you're looking at to invest in one or the other? Does it make a difference?
No.
No?
No. It's just that the earlier you invest, the better off you are. The earlier you start planning. Yeah. Because when you take a look at it, people living longer, a lot longer than previous. People used to retire at 65. The life expectancy was 68. Women was 71. So when they retired, they only worked 3 years or 6 years. Okay? But now, when you retire, you work 30, 40 years you're going to be in retirement.
Yep.
Big difference.
Like I said, my dad's been retired longer than he actually worked. And as he was able to do that because he works in government capacity. And so a lot of people that worked in government, like whether it's state, city, or Pearl Harbor like that, they could do that. But, and they have pensions. But today, 90% of people, when they retire, don't have pension at all. So they have to live on that. So let's say, Travis, I came to you and say, I want to invest in something. What would they invest in? Would it be stocks, bonds, or just kind of pumping the 401k for retirement planning?
Retirement planning, there's stocks and bonds you can look into, but you also want to think about putting some of that money. It depends on the age and things and things like that. You want to look into some kind of life insurance.
And annuity.
Or annuity if they're older. Yeah, if they're older, they can look into annuity and already has money in their 401k.
What do you mean older? Why would it make a difference how old I am if I want to invest in an annuity?
Well, because if I say me, I'm only 36, I don't have much money in the 401k, maybe, so it's not much money to put into annuity. Yeah. So, but if you're older, say around maybe 60, late 60s or 70s, you probably have at least maybe $100,000 or plus in your 401k or then you can probably transfer that in an annuity.
Because annuities, basically annuity, you're investing in annuities because you think you're going to live a long time.
Yeah.
That's why you want annuities.
But so correct me if I'm wrong. So when let's say I have $100,000, and I just retired, why would I do that? Is it because I'm going to get recurring income every month?
Correct.
I see.
Recurring income every month, and it doesn't matter about all the stocks going down. Like how when my dad mentioned that when he retired, right after he retired, the stocks went down. So in this case, if he had some of that money in an annuity, it doesn't matter about the stocks going up or down because he put some of that money in annuities, and then it can get some money guaranteed money coming to every
for the rest
month.
of your life.
But not all of them, though, right? Aren't there some of them fixed?
No, we take a look at it. Most of the annuities, the long you have that amount every month, every year.
There's several different companies, but so that's why it's good to work with a broker, and then we can be able to navigate about which plan is good for them according to what they want to be done.
And so when it comes to annuities, let's say, I'm just thinking about myself and my clients, how would I want it, what I need. Let's say I have an annuity. Would you have it on both of us, my wife and I, or just myself?
Oh, you can have. There's annuities that have both, or a shared one, a joint one, or they can do a single, either or.
Mm-hmm. But one thing you got to remember, Percy, is that when you're talking about annuities, this is money that you're not planning to spend.
Yeah, so I wouldn't say put all your 401k into annuity. I would say maybe depending on how old you are in terms of where you are in retirement and different things, maybe put a partial of it and still leave some monies into your 401ks.
I don't get that. What do you mean by this is money I don't want to spend?
This is money that you're not going to spend in the future. You're not going to be taking it out and using it. Because when you put annuities, you're putting that money aside. Okay.
I can't get it out if I need it.
Well, you can, but there's surrender charges. So you're gonna pay penalties. So we say, you know what, this is money that you're not gonna be using in the near future. You're just putting them on the side, just like when people buy CDs and everything else. It's just the money that they're putting on the side. So this is money that you want to leave to your children or legacy, and then you get the annuities, and then they'll cover you. For the longer you live, the more money you would get, and then if you don't use it, then it'll go down to your
you mean
beneficiaries.
I thought when you die, the money goes away.
No, there's some that you can keep.
Oh, there is.
Yes, there's several different plans depending on what they want to do.
Okay, I thought there was plans. It was only once you died it went away. That's why I was asking about the shared plan.
No.
It goes to your wife. Oh, okay. So. I mean, there's some annuities now that you can invest in now that will pay out later on, right? Mm-hmm. You don't have to take the income right away, right?
No, you don't have to. And the longer you live it in, the more it gets to build.
Well, that's what I was planning on doing, is doing that, and that way I don't need it for, like, let's say I'm 57 for, let's say, 10 years. That's my plan. Retire about 65 to 67 and then enjoy life. But it was my job. I only come here once a week, not a big deal, you know what I mean? Then I get the magazine. It's 2 hours a week, so maybe a little bit more. But anyway, we got only about a couple more minutes left. So what's the best recommendation, or what would your best thing you would tell somebody that, like, I'm 57, I'm going to retire, let's say in 8 years. What would you recommend? Or what would you say I should do?
Well, you should always plan early. So no matter what, you always got to plan early, talk to a professional early, also talk to a person that's like a broker that has access to several different plans as well. That way they can be able to talk to you, and we can be able to find out exactly what your situation is and what you want to do. Because there's no one set way of doing things.
Right.
Yeah, I'm a believer that everyone has different ways about how they want to do things, what they want to accomplish with their monies in the future. Yeah. Always,
and make sure your planner's younger than you, right?
Oh, it helps if they're younger, yeah. Then they'll be around.
Anyway, we're here with Ed and Travis Motosue from Financial Benefits Insurance. Thank you for being our partner now, and we're looking forward to you speaking at the August 19th, Saturday, AGM Place Workshop, the 11th Annual AGM Place Workshop. So anyway, thank you very much for listening in. Don't forget to go to our YouTube channel, our Facebook channel, and follow us and like us. And so thank you very much, Ed and Travis. Thank you very much. Aloha, everybody, and live well.
Yeah, aloha.
Thank you.